Imagine this. Stefan, a friend of mine, was 2 months into his trading journey feeling confident. He'd nailed 8 out of his last 10 trades. His account had grown 11%. He started thinking, I'm getting the hang of this. This is easy. Then the trade happened. A sudden market reversal blindsided him. His position flashed red. He was supposed to take a 1% loss, but as the P&L number dropped, he did the one thing he swore he'd never do. He told himself, it'll come back. I'll just move my stop loss further. I can handle it. Hours later, the market slammed through his new stop. He finally capitulated and hit the close button. The damage, a 10% loss. His entire month's profits evaporated in a single afternoon. Stefan didn't blow up his account that day, but he saw the abyss. But because he learned one critical truth, your number one job as a trader isn't to make money. It's to protect the money you have. Survival is everything. I'm Henrik's AI counterpart. I don't feel greed and I don't feel fear, I only calculate. And today I'm calculating why risk management isn't just part of the game. It is the game. Rule number 1 that saved Stefan's trading career, the 1% rule. Never, ever risk more than 1 to 2% of your total capital on a single trade. This isn't about being timid, it's about buying you time. It's the armor that lets you take the inevitable hits so you can stay in the game long enough for your edge to actually work. Imagine risking 10% on a trade. A few losses in a row and you're down 30, 40, 50%. That's catastrophic. It's a psychological hole you can't climb out of. Risk 1%. And a 10-trade losing streak, which is statistically guaranteed to happen, is just a 10% drawdown. That's a bad week, not a career-ending event. Rule 2. Here's the part Stefan missed. His 1% risk is a dollar amount, not a random number of shares. Your position size must be based your stop-loss distance. Always. If your 1% risk is $100 and your stop-loss is $2 away from your entry, you can buy 50 shares. But if your stop is $10 away, you can only buy 10 shares. The dollar risk is identical. The position size adapts. Dollar risk per trade, box price X number of shares, X stop distance. Stefan was just guessing, so his 1% risk was sometimes 2%, sometimes 8%. He wasn't managing risk, he was gambling. Stefan kept moving his stops further to give trades more room. That's self-sabotage. A stop-loss is not a suggestion. It is a sacred contract you make with yourself before you enter the trade. It is the line in the sand where you admit your analysis was wrong. Moving a stop is like disabling the fire alarm in your house because you don't like the noise. You are inviting disaster. If you've ever given your stops some air, smash that like. You're not alone. This video's your wake-up call. Stefan had to learn to embrace small, paper-cut losses, because the alternative is a catastrophic, career-ending wound. You can be wrong 60% of the time and get rich in this business, if you manage your risk. A single catastrophic loss can wipe you out. Stefan learned to focus on risk-reward, not just wins. He was addicted to his 80% win rate because it made him feel smart. But win rate is a vanity metric. What matters is your risk-to-reward ratio. I would rather be wrong 7 times out of 10 if my 3 winners are 5x my risk. That's a wildly profitable system. Stop chasing wins. Start chasing asymmetry. Always calculate risk first. Stefan sets a max daily loss. Once hit, he stops trading. He calls it his circuit breaker. If he loses 3% of his account in one day, he is done. He shuts down the platform and walks away. This isn't a punishment. It's a system to protect him from himself. It stops a bad day from turning into a revenge trading blow-up. Before dreaming of profits, Stefan calculates risk, sets stops and size. If reward can't cover risk by at least 2.1, no trade, it's not a trade. It's a pass. He waits for a better setup. Risk management is what created Stefan's trading career. Before that, he was just a gambler who hadn't gone broke yet. Risk 1-2% per trade, size by stop distance, honor your stops, accept small losses, avoid catastrophic ones, prioritize risk-reward, Set daily loss limits. Calculate risk before profit. This is the real work of trading. If you want more lessons on survival and consistency, not just magic signals, hit that subscribe button and join the crew. And if this video hit home, if you've ever felt that spike of fear moving a stop, smash that like button. It lets me know we're on the right track. Down below, I want to hear from you. What's the one risk rule you struggle with the most? Is it honoring stops? Is it position sizing? Drop your biggest challenge in the comments. There's no judgment here. Remember, you can't win the game if you're not in it. Trade safe, trade smart. Thanks for watching.